The price of Dogecoin has shown resilience, maintaining stability in the $0.08 region following a 6% decline amidst a broader market downturn that occurred on January 23. This period of consolidation has provided a unique opportunity for bullish investors, particularly those holding significant amounts of DOGE, known colloquially as whales, to increase their holdings substantially. Between January 23 and February 5, these optimistic whales have strategically acquired an additional 260 million DOGE, a move that underscores their strong belief in Dogecoin's potential for a swift recovery and upward momentum in the near future. However, despite this accumulation by bullish whales, technical analysis paints a slightly more cautious picture. The parabolic SAR, stop and reverse, indicator, a tool used by traders to determine the direction of a security's momentum and potential reversal points, currently suggests that bearish forces might still have the upper hand in the market. This indication that sellers might still be controlling the market dynamics adds an interesting layer of complexity to Dogecoin's current situation. Meanwhile, Dogecoin's price defense at the $0.08 mark since the January 23 dip is noteworthy, especially when considering the active engagement of whale investors during this phase. The on-chain data revealing these large-scale acquisitions highlights a significant level of confidence among these investors, suggesting they perceive the dip not as a sign of prolonged downturn, but as an advantageous buying opportunity. This strategic acquisition of DOGE at lower prices could be a precursor to a bullish sentiment building up within the Dogecoin community. The question that now looms large is whether the collective efforts of Dogecoin bulls, buoyed by the aggressive acquisition strategies of whales, will be sufficient to catalyze a strong push towards reclaiming higher price levels, particularly the sought-after $0.01 mark, within the week. This potential for a bullish reversal, set against the backdrop of ongoing bearish technical indicators, sets the stage for a fascinating tug-of-war within the Dogecoin market, capturing the attention of investors and traders alike as they watch closely to see which direction Dogecoin will ultimately take. On January 23, the cryptocurrency market experienced a substantial decline, triggered by a massive sell-off by investors in the Grayscale ETF, leading to billions of dollars being withdrawn from the market. This event had a widespread impact across various cryptocurrencies, particularly affecting several major meme coins. Notably, popular tokens such as Shiba Inu PPE and BNK witnessed significant double-digit percentage retracements in their valuations. Amidst this market turbulence, Dogecoin, DOGE, showcased a notably more robust stance, limiting its losses to a mere 6% deficit, a performance that stood out for its relative resilience compared to its counterparts. This comparative steadiness in Dogecoin's price during a period of market volatility has piqued interest, with on-chain data suggesting a possible explanation. Analysis of this data indicates that a cohort of strategic whale investors, identified by their swift actions to purchase DOGE during the market dip, may have played a pivotal role in stabilizing Dogecoin's price. According to insights from Sentiment, a chart tracking the real-time fluctuations in the holdings of whale wallets, specifically those containing a minimum of 10 million DOGE, valued at approximately $783,000, offers a glimpse into this phenomenon. The chart features a red trend line that highlights a significant detail. On January 23, the day of the market downturn, these whale wallets collectively held an impressive total of 44.75 billion DOGE. This figure is critical as it underscores the substantial influence these large holders can exert on the market dynamics of Dogecoin. The rapid accumulation of DOGE by these whales during the market's dip suggests a strategic move to capitalize on the lower prices, potentially contributing to the relative stability of Dogecoin's price amidst broader market challenges. This activity points to the intricate interplay between large-scale investment actions and market outcomes, particularly in the context of meme cryptocurrencies like Dogecoin, where market sentiment can significantly sway price movements. In a departure from the typical reaction to market downturns, a select group of Dogecoin, DOGE, whale investors opted for an aggressive acquisition strategy rather than succumbing to the prevailing sell-off sentiment. This contrarian approach became particularly evident as the market began to falter. By February 5, in the wake of the market's decline, these whales had notably increased their holdings to an impressive 45 billion DOGE, highlighting a strategic shift in their investment behavior. This accumulation phase saw these prominent investors leveraging the market's dip to enhance their positions significantly, adding a staggering 250 million DOGE to their portfolios. This acquisition, valued at an estimated $20.5 million, took place over the span from January 23 to February 5, underlining a concerted effort to buy into the downturn. This influx of buying pressure from the whales has been instrumental in stabilizing DOGE's price, enabling it to maintain a level above the critical $0.08 threshold. This resilience is particularly noteworthy given the susceptibility of other meme coins to more pronounced declines under similar market conditions. This phenomenon is not without precedent. A review of Dogecoin's market history reveals that such accumulative actions by whale investors have frequently set the stage for subsequent price surges in DOGE. These periods of concentrated buying have often served as harbingers of bullish momentum for Dogecoin, laying the groundwork for notable uptrends. Given this established pattern, there is a palpable sense of anticipation among DOGE traders and the broader community that the recent whale activity could be the precursor to another upward movement. If this pattern holds true to form, there is a plausible scenario where Dogecoin could see its value ascend towards the $0.01 mark in the upcoming week, offering a potential window of opportunity for astute traders and investors attuned to these historical trends and current market dynamics. Analyzing the latest on-chain data and market trends, Dogecoin appears poised for a promising start to the week, with potential momentum building towards a re-evaluation of the $0.01 price level. This optimistic outlook is fueled by a confluence of factors that suggest an impending upward movement in Dogecoin's market valuation. However, traders and investors should be cognizant of the technical challenges that lie ahead, particularly when considering the insights provided by the Bollinger Bands, a widely respected technical analysis tool. According to this indicator, Dogecoin's upward trajectory may encounter significant resistance at the $0.85 mark, a critical juncture that could determine the short-term direction of its price movement. Currently, Dogecoin is trading at $0.79, positioning itself just shy of the 20-day simple moving average (SMA), a key indicator often associated with bullish momentum in the market. This proximity to the 20-day SMA underscores the potential for a bullish resurgence, should Dogecoin manage to surpass the notable resistance at $0.85. Successfully breaking through this sell wall could catalyze a substantial rally, possibly propelling Dogecoin's price towards the anticipated $0.01 target. However, this bullish scenario is not without its caveats. There exists a tangible risk that bearish forces might disrupt this positive narrative, particularly if Dogecoin's price were to fall below the $0.07 mark for the first time in 2024. Such a downturn would necessitate a reassessment of the bullish outlook. Nonetheless, the lower Bollinger Band presents a silver lining, indicating a strong support level at $0.75. This level could serve as a formidable barrier against bearish pressures, potentially entering Dogecoin's price and offering a foundation for recovery and subsequent growth.